Avalanche, the high-speed finance chain speed. Scale.finance. These three words capture the promise of Avalanche, AVAX, one of the most ambitious blockchain platforms in the race for the future of money. While Ethereum pioneered smart contracts and Cosmos and Polkadot built networks for interoperability, Avalanche set out to answer a different question. Can blockchains handle the speed and scale of global finance? The vision came from Emin, a Cornell computer scientist and longtime voice in the crypto community. He saw the limitations of existing blockchains, slow transactions, high fees, poor scalability, and believed the world needed a new architecture. One capable of supporting not just DeFi apps and NFTs, but the institutional finance layer of tomorrow. Avalanche launched in 2020 with a bold claim. It could achieve sub-second finality. Transactions confirmed faster than a credit card swipe. Not minutes, not even seconds. Instant. For a financial world accustomed to near-instant settlement in trading and payments, Avalanche promised to bring that same experience to blockchain. The secret lay in its consensus design. Instead of classical BFT models like Tendermint or probabilistic ones like Bitcoin's proof of work, Avalanche introduced a new family of protocols, Snow Consensus. By repeatedly sampling small groups of validators until the network converges, Avalanche achieves both speed and scalability without sacrificing decentralization. The result? A network capable of thousands of transactions per second, rivaling Visa-level throughput. But Avalanche didn't stop there. It introduced a multi-chain architecture with three core chains. X-chain for simple asset transfers, C-chain for Ethereum-compatible smart contracts, P-chain for validators and subnet management. This architecture wasn't just modular, it was extensible. Through subnets, Avalanche allows anyone to launch their own blockchain tailored for their use case, governed by their own rules, but secured by Avalanche's validator set. Think of it as Ethereum's rollups or Cosmos's zones, but baked directly into the core protocol. This flexibility has caught the attention of institutions. While Ethereum dominated DeFi, Avalanche positioned itself for tokenization of real-world assets. Partnerships began forming with enterprises, financial institutions, and even governments testing Avalanche for everything from carbon credits to bond markets. In a world racing toward the tokenization of trillions in assets, Avalanche's speed and customizability make it a serious contender. Yet Avalanche's rise hasn't been without challenges. Competing against Ethereum's network effects, Solana's retail hype, and Cosmos's sovereignty narrative has forced Avalanche to carve its own identity. Its focus on finance and subnets gives it a niche, but adoption will determine if it becomes the high-speed financial backbone or just another experiment in scalability. The story of Avalanche is more than just another blockchain launch. It's about the intersection of technology, finance, and institutional trust, about whether blockchains can meet the demands of Wall Street speed while preserving crypto's decentralized roots. This documentary dives into that story, from Avalanche's birth under Emin to its groundbreaking consensus, its ecosystem growth, and its future in the race for tokenized finance. This is Avalanche, the high-speed finance chain. Part 1, The Birth of Avalanche. The story of Avalanche begins long before its launch in 2020, with its founder Emin. Born in Turkey and later a computer science professor at Cornell University, Emin was a respected voice in distributed systems and cryptography. Long before crypto became a buzzword, he was researching peer-to-peer networks and consensus. In fact, back in 2003, he proposed a concept for a digital currency called Karma, years before Bitcoin was even published. When Bitcoin appeared in 2009, Searer was both impressed and critical. He admired its decentralization but warned about its inefficiencies and limitations. He argued that proof of work was too energy-intensive and too slow to ever scale to mainstream finance. For years, he pushed for better designs, ones that could preserve decentralization but also match the speed of traditional finance. That vision crystallized in 2018, when Searer and a group of Cornell researchers published a new family of consensus protocols known as Avalanche. Instead of miners racing to solve puzzles, Avalanche consensus relied on repeated random sampling of validators. Each validator pulls a small subset of others, and over successive rounds, the network quickly converges on agreement. The brilliance was in its simplicity, fast, scalable, and secure. This breakthrough led Sirer to co-found Avalanche with Kevin Seknicki and Maofan Ted Yin. Their goal? Bring Avalanche consensus out of the lab and into the real world as the foundation of a new blockchain platform. In 2020, the Avalanche network launched with a splash. Ava Labs positioned it as the next-generation smart contract platform, capable of processing thousands of transactions per second with near-instant finality. The launch was backed by strong venture capital support, including from firms like Andreessen Horowitz and Polychain Capital. Avalanche also arrived with an ecosystem-first approach. From the start, it included support for Ethereum's Solidity smart contracts via the C-chain, making it easy for developers to port over dApps. At the same time, the X-chain allowed for fast asset transfers, and the P-chain managed validators and subnets. This tri-chain architecture made Avalanche stand out from single-chain rivals. But what really captured attention was Avalanche's focus on subnets. From day one, Ava Labs pitched Avalanche not just as a single blockchain, but as a platform for building many customized blockchains. Enterprises, governments, or DeFi projects could create their own subnets with unique rules, tokens, and governance, all while benefiting from Avalanche's consensus. The launch of AVAX, Avalanche's native token, provided the fuel. Validators staked AVAX to secure the network. Users paid fees in AVAX, and subnets integrated it into their economic models. Within months, Avalanche gained traction, with DeFi projects migrating and new apps launching to leverage its speed and low fees. For Emin, Avalanche was the culmination of decades of research. It wasn't a clone of Bitcoin or Ethereum. It was the realization of a new consensus model, one that aimed to finally solve the blockchain trilemma of scalability, decentralization, and security. The birth of Avalanche wasn't just about technology, it was about credibility. With Sirer's academic pedigree, Ava Labs' strong backing, and a network architecture that felt genuinely new, Avalanche entered the crypto stage not as an imitator, but as a contender. The next chapter would dive into the technology of Avalanche itself, its consensus, multi-chain design, and subnet architecture, and why it positioned Avalanche as a blockchain built for the speed of global finance. Part 2. Avalanche's technology. At the heart of Avalanche lies a bold claim: near-instant finality. Where Bitcoin can take an hour to confirm with absolute certainty, and Ethereum takes minutes, Avalanche can finalize transactions in under a second. For global finance, where trillions move daily at high velocity, that difference isn't just technical, it's existential. The secret is Avalanche's Snow Consensus Protocol. Unlike proof of work, which requires miners to solve puzzles, or proof-of-stake systems that depend on classical Byzantine fault-tolerant models, Snow works through a process of repeated random sampling. Validators don't need to check every other validator. Instead, they query small random groups and adopt the majority opinion. Over multiple rounds, the network quickly converges, locking in finality with overwhelming confidence. The result is speed without sacrificing decentralization. With thousands of validators able to participate, Avalanche avoids the bottlenecks of proof of work and the centralization risks of smaller validator sets. This innovation makes Avalanche one of the few blockchains to approach Visa-level throughput while keeping participation open. But consensus is only part of the design. Avalanche's architecture is built around 3 core chains. X-chain, optimized for simple asset transfers, allowing AVAX and other tokens to move quickly and cheaply. C-chain, fully compatible with Ethereum's Solidity smart contracts, enabling developers to port over dApps without rewriting code. P-chain, handles staking, validators, and, most importantly, the creation and management of subnets. This tri-chain system separates functions for efficiency. Instead of overloading a single chain with every type of activity, Avalanche distributes tasks across specialized layers, minimizing congestion. The real breakthrough, however, is the concept of subnets. Subnets are customizable blockchains that run on Avalanche's consensus, but can define their own rules. A subnet can set unique tokenomics, governance models, validator requirements, even compliance standards. Enterprises can build private or public subnets tailored to their industries, while DeFi projects can launch high-performance chains without being constrained by Ethereum's fees or throughput. Think of subnets as Avalanche's answer to Ethereum rollups or Cosmos zones, but integrated into the protocol itself. Unlike rollups, which rely on Ethereum for settlement, or Cosmos zones, which must secure themselves independently, subnets inherit the efficiency of Avalanche's consensus while retaining flexibility. This makes them attractive for financial institutions seeking both speed and customizability. Avalanche also tackles interoperability head-on. Through its Ethereum-compatible C-chain, it plugs into the largest existing ecosystem of smart contracts. Bridges extend this connectivity further, linking Avalanche to Bitcoin, Ethereum, and other networks. While not as seamless as Cosmos's IBC, Avalanche balances compatibility with performance, carving out a niche in the crowded interoperability race. This technical foundation is why Avalanche markets itself not just as another DeFi platform, but as the finance-ready blockchain. Tokenized assets, derivatives, carbon markets, and even government bonds could, in theory, run on Avalanche subnets with the same speed as Wall Street systems. For institutions wary of public chain inefficiencies, Avalanche promises familiar performance in a decentralized environment. Of course, challenges remain. Subnets fragment liquidity as assets can spread across multiple chains. Ethereum's Layer 2 rollups are evolving fast, offering scalability while keeping ties to Ethereum's massive liquidity pool. Solana, Avalanche's high-speed rival, boasts similar throughput but markets itself as the retail-friendly chain of NFTs and consumer apps. Avalanche must prove that its subnet model offers more than technical novelty, that it can attract the depth of adoption needed to make it indispensable. Still, Avalanche's technology is one of the boldest experiments in blockchain architecture. By combining novel consensus with modular design and customizable subnets, it aims to become more than a blockchain. It wants to be a platform for blockchains, a financial ecosystem as fast as it is flexible. The next chapter explores how this technology translated into ecosystem growth and adoption, from DeFi protocols and NFT marketplaces to institutional pilots and tokenized real-world assets. Part 3. Adoption and ecosystem growth. Technology sets the stage, but adoption writes the story. For Avalanche, its breakthrough consensus and subnet architecture needed real-world traction to prove they weren't just academic achievements. In just a few years, Avalanche's ecosystem has grown into one of the most dynamic in crypto, though not without challenges along the way. The turning point came in 2021 with Avalanche Rush, a $180 million liquidity mining incentive program. By attracting major DeFi protocols like Aave, Curve, and SushiSwap to deploy on Avalanche, the network suddenly found itself flooded with liquidity and users. The incentives worked. Avalanche's total value locked skyrocketed, positioning it as a serious competitor to Ethereum and Binance Smart Chain in the DeFi wars. Native projects also began to flourish. Trader Joe emerged as Avalanche's homegrown decentralized exchange, blending swaps, yield farming, and lending into one platform. Benki offered liquid staking and lending services, while Platypus Finance specialized in stablecoin swaps. Together, they gave Avalanche a robust DeFi backbone, proving that it could sustain both imported and homegrown innovation. Beyond DeFi, Avalanche found surprising traction in NFTs and gaming. Marketplaces like Kalau and JPEGs drew artists and collectors, while blockchain games began experimenting with subnets for performance. Projects like Kribata and DeFi Kingdoms temporarily turned Avalanche into a hotbed of play-to-earn activity, though many struggled to sustain momentum after the 2021 boom. Where Avalanche really started to differentiate itself, however, was in subnets. Enterprises, institutions, and even governments began exploring Avalanche's customizable chains. DeFi Kingdoms migrated to its own subnet for scalability. Swimmer Network built a gaming-focused subnet, but the most important developments came from institutions. In 2022, Avalanche partnered with Deloitte to build a disaster recovery platform for the Federal Emergency Management Agency, FEMA. This wasn't DeFi or NFTs. It was a real-world use case for blockchain infrastructure, showing Avalanche's institutional ambitions. Around the same time, Avalanche Labs joined forces with the digital asset platform Intain to tokenize asset-backed securities, pushing deeper into financial markets. The vision of tokenized finance became Avalanche's calling card. With subnets able to define compliance rules, permissioning, and governance, financial institutions saw a blockchain that could actually fit their requirements. In 2023, Republic launched a tokenized securities platform on Avalanche, and Securitize began exploring token issuance. For an industry racing toward the $16 trillion tokenization opportunity, Avalanche positioned itself as a tailor-made solution. Still, growth hasn't been without obstacles. Avalanche's DeFi activity cooled after the broader bear market, with TVL declining from its 2021 highs. NFT traction lagged behind Solana's booming ecosystem, and competition from Ethereum Layer 2s drew liquidity back toward Ethereum's orbit. Avalanche had to fight to maintain relevance in a crowded field, but its edge remains in subnets and institutions. While retail narratives shifted, Avalanche doubled down on its role as the high-speed finance chain. In 2023 and 2024, new subnets launched for gaming, institutions, and even government pilots. The focus wasn't on meme coins or speculative hype. It was on building blockchain rails for real-world finance. This is what sets Avalanche apart. Solana courts retail and NFTs. Ethereum dominates with liquidity, and Layer 2's Cosmos bets on sovereignty. But Avalanche leans into a different lane, being the blockchain infrastructure for financial markets and enterprises. The next chapter will compare Avalanche head-to-head with its competitors in the scalability and interoperability race, Ethereum, Solana, Cosmos, and Polkadot, and explore whether Avalanche can maintain its niche as the high-speed chain of global finance. Part 4. Avalanche versus the competition. Avalanche didn't emerge in a vacuum. From the moment it launched, it faced a crowded field of competitors, each claiming to solve blockchain's trilemma of speed, security, and decentralization. To understand Avalanche's place in the crypto landscape, we have to see how it stacks up against Ethereum, Solana, Cosmos, and Polkadot. Ethereum remains the dominant force in smart contracts. With the largest developer base, deepest liquidity, and most mature ecosystem, Ethereum is the giant Avalanche must contend with. Ethereum's biggest weakness has always been scalability, but its solution, Layer 2 rollups like Arbitrum, Optimism, and ZK Sync, is maturing fast. These rollups allow Ethereum to scale transaction throughput while inheriting its security. Avalanche's advantage is speed and subnets, but Ethereum's network effects are unmatched. Avalanche must convince developers and institutions that it offers something fundamentally better, not just faster. Solana is Avalanche's closest rival in the speed race. Both chains boast thousands of transactions per second and sub-second finality. But Solana markets itself to retail, NFTs, gaming, and consumer apps. It became the hub for digital art and meme coins, leveraging hype cycles to attract users. Avalanche, by contrast, positions itself for institutions and finance. While Solana thrives on cultural momentum, Avalanche builds on enterprise credibility. It's speed versus speed, but with different audiences in mind. Cosmos represents another angle, sovereignty plus interoperability. Through its SDK and IBC protocol, Cosmos allows projects to launch fully sovereign chains that can still communicate. Avalanche's subnets look similar, customizable blockchains with unique rules. But the difference is in security. Cosmos zones must secure themselves, while Avalanche subnets inherit consensus from the Avalanche network. Cosmos is about freedom first. Avalanche is about efficiency and scalability within a unified framework. Polkadot takes yet another path, shared security under its relay chain. Parachains plug into the main chain, gaining its validator protection. This contrasts sharply with Avalanche's model, where subnets are independent but tied together through common consensus. Polkadot emphasizes unity, Avalanche emphasizes modular speed. Both offer interoperability, but their trade-offs appeal to different builders. So where does Avalanche sit in this crowded landscape? Its niche is clear: finance-ready infrastructure. Ethereum owns liquidity, Solana owns culture, Cosmos owns sovereignty, Polkadot owns shared security. Avalanche wants to own institutional finance. By delivering Wall Street-grade performance and flexible subnets that can adapt to compliance and governance needs, Avalanche makes its pitch not to meme traders, but to enterprises, governments, and institutions preparing for tokenization. This doesn't mean Avalanche ignores retail. Its DeFi ecosystem is robust, its NFTs exist, and gaming subnets are live. But compared to Solana's meme-driven retail dominance, Avalanche's branding leans heavily into seriousness, credibility, and finance. It wants to be the blockchain that banks trust, the rails of tomorrow's tokenized markets. Still, the competition is relentless. Ethereum's rollups may erode Avalanche's speed advantage. Solana's explosive community growth may capture developers first. Cosmos's sovereignty model appeals to decentralization purists. Polkadot's shared security is attractive for risk-averse institutions. Avalanche has to prove that its balance of speed, flexibility, and credibility makes it not just one of many, but the high-speed finance chain. The final chapter will explore what the future holds for Avalanche, its risks, its opportunities, and the speculative arc of whether it can evolve into the financial backbone of the tokenized global economy. Part 5. The future of Avalanche. Avalanche has always been about ambition. The ambition to match Wall Street speed, to tokenize global finance, and to redefine what blockchains can do. But ambition alone doesn't guarantee destiny. The future of Avalanche hinges on whether it can convert its bold technology and institutional focus into long-term dominance. The opportunity is enormous. Analysts predict the tokenization of real-world assets, from stocks and bonds to real estate and commodities, could unlock tens of trillions of dollars in new markets. Whoever provides the rails for this tokenized economy stands to become the backbone of global finance. Avalanche is positioning itself as that backbone, with subnets designed for institutions to launch compliant, customizable blockchains. Already, pilots with Deloitte, Intain, Republic, and Securitize point toward Avalanche's finance-first narrative. But it isn't just institutions. Avalanche also has an opportunity in gaming and consumer subnets. Projects like DeFi Kingdoms, Polkadot, and newer gaming ecosystems show that subnets can scale to handle user bases traditional blockchains can't. If consumer apps embrace subnets, Avalanche could host the next wave of mainstream blockchain adoption. Games, apps, and metaverse platforms that need high throughput and independence. Still, the risks are real. Liquidity fragmentation is one of Avalanche's biggest challenges. As more subnets launch, liquidity spreads thin across them, weakening the network's overall financial gravity. Ethereum rollups, by contrast, concentrate liquidity in Ethereum's orbit, making them more attractive for DeFi. Avalanche must find ways to unify subnet liquidity, or risk watching developers migrate back to Ethereum's liquidity pools. Then there's competition. Ethereum remains the giant, with Layer 2 scaling improving daily. Solana, Avalanche's closest high-speed rival, has proven resilient and continues to dominate cultural narratives in NFTs and retail adoption. Cosmos appeals to builders who want sovereignty, and Polkadot appeals to institutions who value shared security. Avalanche is fighting on all fronts: speed, adoption, and narrative, and it must carve its identity sharply to survive. Another risk is market perception. Avalanche markets itself as the finance-ready blockchain, but institutional adoption has been slower than expected across the crypto industry. Governments and banks are cautious, and tokenization has yet to break out beyond pilot projects. If real-world adoption lags, Avalanche may struggle to prove its thesis in time, leaving it caught between institutional promises and retail disinterest. Yet the speculative arc is compelling. Imagine a future where financial markets run on Avalanche subnets. Tokenized bonds trade instantly. Real estate assets move with the speed of digital cash. Carbon credits, securities, and commodities flow seamlessly across compliant blockchains. Avalanche could become the engine room of tokenized finance, not the loudest chain in crypto, but the most indispensable. Even beyond finance, Avalanche's modular architecture positions it as a potential backbone for industry-specific ecosystems. Supply chain blockchains, healthcare data networks, gaming metaverses, each running their own subnet, but connected through Avalanche's consensus. In this vision, Avalanche doesn't compete with Ethereum or Solana for hype. It becomes something different, the financial and industrial substrate of Web3. The risk is that it never gets there, that Ethereum's rollups dominate, that Solana wins retail, that Cosmos and Polkadot win the interoperability race, that institutions drag their feet. Avalanche's future is bold, but not guaranteed. For now, Avalanche is building. It has the technology, it has the vision. The question is whether the world is ready to run its financial future on the high-speed finance chain. The high-speed finance chain. In crypto, speed is survival. In finance, speed is everything. Avalanche was built for both, a blockchain designed to settle transactions in the blink of an eye, and to give institutions and innovators the tools to tokenize the financial system itself. It may not dominate headlines like Bitcoin or Ethereum. It may not ride the cultural hype waves like Solana, but Avalanche is carving its lane. as the chain that could one day power the tokenized markets of the world. If finance is moving on-chain, Avalanche wants to be the rails. Here at LTL Productions, we uncover the untold stories of crypto, the technology, the visionaries, and the networks shaping the Internet of Value. Subscribe to LTL Productions for more deep dive documentaries. Share this video with someone who believes speed doesn't matter in blockchain. And join us as we continue to map the future of money. This is LTL Productions, and this is Avalanche, the high-speed finance chain.